With foreign investors now facing a 30% capital gains tax, will Nigeria's bold new tax policy backfire or boost reinvestment? Good morning and welcome to another power-packed episode of Business Week. Donald Trump throws Argentina's embattled President Milei a $20 billion lifeline, while Kenya is swapping dollar debt for Chinese yuan in a bid to ease repayment costs. And back home here in Nigeria, the country's move to triple capital gains tax on foreign investors is stirring market anxiety. Over elsewhere, Netflix is leveling up in the gaming world, launching TV-based play to keep users hooked, and gold breaks through the $4,000 per ounce mark as investors seek safety in a stormy world. Later, we go beyond the boardroom numbers in our deep dive with exclusive insights from the just-released NGX 30 Gender Diversity Scorecard. As always, if you missed any of the big business stories of the week, don't worry, I've got you covered. I'm Rolake Akinkunmefilani. As always, we start with a look at global energy commodities. Let's start with Brent crude, and all the major indices were down week on week. So many drivers and factors here. First of all, OPEC did do a moderate release of its output cuts for November. And we're seeing a moderation of geopolitical risk, of course, with the ceasefire announced between Israel and Hamas due to start as part of President Trump's plans. And, you know, the market is currently pretty well supplied. And, of course, the moderating of geopolitical risk is likely to impact on prices going forward. Prices almost hitting $60 per barrel. Pretty low that we've seen in recent months. RBOB gasoline was also down. Natural gas was down by 5.97% week on week. Let's take a look at equities markets. We start, of course, in Nigeria. The all-share index ended week on week up by 2.37%. However, the number of deals and the volume of shares traded, as well as their value, were down by significant numbers. Almost 45% value down there week on week on the NGX, but equity cap was up by 2.37% week on week to close at 93.29 trillion naira. Let's look at equities capital markets from elsewhere across the continent. We start, of course, with some of the key African indices: Joburg, Accra, there, Kenya, and Casablanca. Kenya and Casablanca were the two bearish markets. Interestingly, Kenya, a big utility on the exchange there in Nairobi, Kenya Power, one of the key utilities, saw its profits fall by almost 20%. So weighing down on the index there in Nairobi. But Accra and Joburg held up relatively well at the end of the week. Let's look at Wall Street. Wall Street, pretty grim numbers here week on week. The Dow Jones Industrial Index was down by 1.97%. Markets perhaps not really sustaining the hype around the rate cuts we saw with the Fed at the last sitting. Still, relatively gloomy outlook on global markets, especially now with a threat of a new escalation front in the tariff tensions. Trump threatening an additional 100% tariff on China, which may have weighed on market sentiment as the week ended last week. Nasdaq was also down by 0.86% week on week. Let's take a look at my top picks from around the world. First, we stop with President Trump's lifeline to Milei in Argentina, a $20 billion swap lifeline to buy pesos, to keep the peso strong. Now, Argentina's Milei is facing midterm elections later this month. So this move could actually make and significantly change the game and help him shore up his political support, particularly around economic reforms. Trump there supporting the Argentinian government as part of its IMF program to keep the Argentinian peso pretty strong. But the risk here really is that should Argentina face major economic headwinds that derail this plan, the US government could be left holding peso that have significantly depreciated. So, you know, what sort of bets were placed around making this move by the Trump administration? Time will tell. But certainly a major bailout there for Milei at the last minute. Kenya has swapped $3.5 billion worth of loans from dollar-denominated loans to the Chinese yuan. And this is a major front in sort of strengthening ties with China here, because this is part of a big railway infrastructure project of which Chinese contractors are playing a huge role. Now, Out of that, there's about $1.5 billion left in debt service under that $5 billion loan. And the swap actually reduces the interest servicing costs, which are now estimated at about, almost $250 million annually. So this is some temporary relief for the Kenyan government under this arrangement, and actually could set a precedent for similar types of currency denomination swaps for loans held by African sovereigns. Congrats there to the Kenyan government. I should actually say congrats to the Chinese, because they've actually strengthened their position in Kenya beyond just contracting on large-scale infrastructure projects. Angola has re-entered the Eurobond market. It has launched a dual tranche Eurobond issue, a 5-year bond and a 10-year bond, taking advantage there of easing yields globally, as well as the narrowing premium frontier market sovereign securities there. Angola, essentially, I think the yields were priced at around 9.75% for the 5-year bond, and about 10% for the longer dated bond. That's a 10-year bond. And Angola is facing a bond redemption coming up in November, almost $900 million. So part of the proceeds from this issuance will go towards refinancing that obligation. Interestingly, since the start of the year, we've seen over $15 billion worth of Eurobond issuance by African sovereigns. That's about 25% up from 2024. Market conditions, of course, really ripe for that. Now, Africa's data center power demand is set to have increased 25% year on year to well over 8,000 gigawatts per hour. And this is really driven by so many things: the manufacturing, industrial demand, but also technology and AI. We're seeing new centers also being constructed in key economic hubs around the continent. So it's no surprise that power demand is up. The key question is, how much of this new demand can we meet in terms of capacity and generation? And finally, the World Bank has lifted its growth outlook for key African economies, for Ethiopia, for Nigeria, for the Ivory Coast as well. This is part of its outlook revision, revising growth, average growth up to about 3.8%. And over the next 2 years, average growth in sub-Saharan Africa, according to the World Bank, will be at around 4.4%. Now, however, the World Bank has emphasized that African economies are not yet out of the woods, because many issues such as fiscal consolidation could actually place a dampener on the improved conditions, particularly stable exchange rates, moderating inflation, which has allowed a new surge in investment and consumption. But many African governments are still fiscally constrained. Some of them still face huge debt burdens. And so it might be too early to tell whether that trend of improved growth will be sustained in the longer term. And of course, the Nigerian government, you would have seen the news, countering a World Bank report recently around poverty levels in the country. We'll have more on that later in the show. That's it for my top picks from around the world. Let's now take you to our top stories from around the world. First, Netflix is taking a big swing at the gaming market. At the Bloomberg Screen Time event, co-CEO Greg Peters revealed that the company is rolling out its first ever games on smart TVs. Titles like Boggle Party and Tetris Time Warp are part of the test run, signaling Netflix intend to push beyond traditional streaming. Now to a key global commodity. Gold has smashed through a new milestone. The safe haven asset soared past $4,000 an ounce for the first time ever, driven by escalating global tensions and expectations of a US rate cut. Gold is now the year's best performing asset, outpacing US stocks, Bitcoin, and oil, with over 50% gains year to date. A US government shutdown is looming once again, and this time lawmakers have been deadlocked over budget talks. The real estate market particularly could take a hit. A shutdown could also delay mortgage approvals, stall home leases, and disrupt commercial deals, adding more uncertainty to an already fragile economic outlook in the country. Back here in Africa, Kenya is ramping up its approach to infrastructure investment. The government recently announced plans to launch new sovereign and infrastructure funds to attract long-term capital without ballooning public debt. It's also pushing through legal reforms to fast-track privatization. Nigeria's government is tripling capital gains tax, planning to triple capital gains tax on foreign equity sales. From January 2026, capital gains tax for foreign investors will rise to 30% unless proceeds are reinvested locally. That's a major hike from the current 10%. With the NGX up over 40% this year, analysts warn the move may dampen sentiment just as foreign inflows were gaining momentum. We'll be talking about that more later on the show. Now, across the country in Nigeria, fuel attendants at filling stations are sounding the alarm, and the issue is that a growing number of retail workers say they face poor pay, long hours, and hazardous working conditions. The complaints published in a recent open letter highlight what they call a silent crisis in the petroleum retail industry. Still on oil, Nigeria is looking to monetize its gas riches. A new roadmap from the Nigeria Upstream Petroleum Regulatory Commission, NUPRC, targets 55 trillion cubic feet of untapped gas. So far, it's attracted nearly $5 billion in fresh investment, a positive signal for Nigeria's energy transition ambitions. And still, NUPRC says Nigeria's oil rig count has surged dramatically. According to the NUPRC reports, the country now has 69 active rigs, up from just 8 in 2021. That's a massive 762% increase in under 4 years, driven by improved investor confidence and regulatory clarity. The Bank of Industry in Nigeria is backing youth entrepreneurship with new capital. The BOI has launched a 2 billion naira loan scheme targeted at National Youth Service Corps members. Young entrepreneurs can now access up to 5 million naira at a 9% interest rate to kickstart their business deals. And the Nigerian government has abolished the long-standing practice that allowed revenue agencies to deduct a share of funds as the cost of collection before remitting proceeds to the Federation account. Finance Minister and Coordinating Minister of the Economy, Wale Edu, announced the policy shift in Abuja on Thursday at the launch of the National Development Update. According to him, the decision, approved by President Bola Ahmed Tinubu, is aimed at tightening fiscal discipline, enhancing transparency, and ensuring that all revenues are available for distribution among the 3 tiers of government.